Hello and welcome back to our regular slot here on Dukascopy TV, where we look at some of the technicals in the Forex market. Joining me as usual is Bruno Estier. Bruno, we're going to be talking about a number of things today. We're looking at Japan, the US, Europe, but it's also the start of the second quarter. So if we can, let's start at looking at European equities, if we could.
Yes, in fact, this is the interesting part, because this time European equities are showing the lead in the small move. We have here a daily chart of the Euro stocks, and on the blue we have these triangles, and we see that in the last 3 days there is a break up of this triangle.
Okay, let's have a look at some of the targets then.
Well, based on this move, this compression move between 31.75 and 29.44, we have a first target of 32,300. But if we look at weekly charts, taking more distance, we notice that we have compressions of the Bollinger Band, which have been flat, and that means that once the price move above the upper band, volatility should increase, and therefore we can expand the target to 3440, 3400 area.
Bruno, you mentioned earlier that the 31.75 mark was hard to crack. Is that clear now?
Well, this is a good question. You remember that we shown this 31.75 level as the result of the clouds, which was capping the market for all of 2012, 2013, and especially recently in the last 3 months, it has been really acting as a strong ceiling on the market. And now it is clear. So yes, the answer is yes, it's open to the upside.
Now, there's good news in other markets too. Let's take a look at Japan, if we could, for a moment.
What is nice, after a tough quarter for the first quarter in the Nikkei, where we had, in fact, in January, a relatively strong down move from 16,000 to 14,000. During March, we have the confirmation that we are building a base around 14,000, and just this time above the clouds, which this time acts as a support. So the good news is that most probably we expect the market to rebound from 14,000 to 16,000, because the relative strength of the Nikkei versus the S&P has already decreased a lot and is ready to rebound, as we see here on the dotted line on the upper part of the panel.
Does this mean we're going to see a correlated move with the weakening of the yen?
Well, we hope so. If we look at that, what we hope is to see a similar move as what we saw in September, October last year. After a long consolidation, we had a breakdown and a substantial weakening of the yen. Here we have also in February and March a very narrow range, and now breaking the support trend line around 97 or $103 yen, it should open a move down to 94 or at least $106 yen.
And what about the US? Is the US sort of partaking in this bullish outlook?
Well, it is this time a little bit of lagging. It has been slow to react, but in the last 3 days, we do have now a test of the upper resistances, and this upper resistance has been tested all along through March. It was around 1880, 1875, and now with an 1885 close yesterday, we seems to open up the move, with also daily oscillators which are pointing up, and also a longer term oscillator MACD which is turning up, which is an indication of the trend.
And can we zoom in on those targets in a bit more detail, Bruno?
If we zoom a little bit more detail, we'll see that on the weekly chart we have more upside. Why? Because we were relatively close to the support trend line. And secondly, if we take a move from 1850 back to the July levels of 1650, what we notice is that at least we have an extension around 1988. So between 1988 and 1970, we have a kind of cluster, which is confirmed both by the weekly and the daily charts. So we do have probably a relatively strong move during April, as it's usually the case for all Aprils.
Bruno, interesting, a thorough analysis once again. Thanks very much for coming in today.
You're welcome.
That's it for the moment here on Dukascopy TV. Stay tuned with us for more interviews later on. And of course, Bruno will be back in a fortnight's time for more technical analysis here on Dukascopy TV. But for now, from me, it's bye-bye.